Hey, so welcome back. Today we're going to be doing a deal analysis on this property in Whitefish, Montana. So we'll go through the whole process of doing a deal analysis. So we found this property through Zillow. We use Zillow because it integrates well with BNBCalc, and so we're going to go through this property. So this property is listed for $900,000. It's a 2-bed, 2-bath. It's 1,484 square feet. It's in Whitefish, Montana, has 3 garage spaces and just under 5 acres. There's no HOA. And here are the photos of the property. So it has an interesting architecture, more cabiny lodge feel. It's located up kind of between the lake and the ski resort in Whitefish, Montana. So looks like, it obviously could use some work to turn it into a short-term rental, but it has a good foundation structure from the looks of it and, um, good place to start for a rental property. It has a nice outdoor area with a deck and a hot tub, some garden beds, a little stream in the backyard. So there's a lot you could do with this property if you want to develop it further. So we're going to take this property, we're going to hit the share button, get shareable link, copy that. We're going to jump into BNBCalc. We're going to say new analysis, buy to own. We're going to import it from Zillow using the shareable link. And we're going to jump back in here. We know it's a 2-bed, 2-bath. So we're going to change this to 2-bed, 2-bath. So this could probably sleep 6 guests depending on the arrangement. It's 900,000, so we're going to enter that here. For sale, here's the link. All right, so we're going to go in and show earnings. All right, so now that we're in here, we are going to go find some comps. So we can jump into PriceLabs, so we can look here under Whitefish, Montana, sort by 2 bedrooms. Here are some 2 bedrooms that have been getting some reviews. We want a short-term rental. This is a mid-term rental. You could see kind of what they're doing as far as their listings look like. So here are a few examples. So here's one cabin. As we can see, like, they don't have professional photos. They didn't do too much as far as the decorating inside. There's not much description. So we could do a lot more to bump up this listing. Let's look at the next place. Again, kind of similar, not professional photos. They could do a better job with how they've set up this place. But again, like, that's expected. Depending on the area, there might be a lot of room to build your place as a more established rental. So this is the last one, and it looks like it's a little bit more professionally done. Decent photos, decent setup. Looks like it's probably in the resort on the mountain, and has a little bit longer description. So based on that, we're going to look back at those rental rates and kind of could see 358, 372, 323. And from there, we can kind of just adjust these. So, it could be something like 425 a night, depending on how well you do the rental property. You might be able to do it even a little bit more. Occupancy rate's 52. If we do it really nicely, and we cater to the summer activities and the winter activities, maybe we could get up close to 65, 70. So at 65% occupancy rate, now we have a $32,000 a year profit from the cash flow. So we're going to look at the operating expenses. So these are standards that BNBCalc puts in just on average across the US. Here's maintenance expenses, again, just kind of average, platform and fees. So you can tweak all these as you need, but for the purpose of this, we'll just leave it as the average. So you can see that the property, year one will have a decent cash flow, but as time goes on, the cash flow gets more and more prominent as you pay down the loan and as rates increase. So you can see that as the blue block there. Return on investment, 32.97%. If you're going to do any renovations, you could put that in there to adjust the rate. Cash on cash return is 15%. So it's a pretty good return in today's market. Obviously, it'd be nice to get a little bit better, but being 5 acres, you could potentially add some more doors to this property. So a good example is if you added more doors, you can adjust this by going editing property. You could say, maybe I'm going to throw a tiny house or yurt and add 2 more bedrooms, add some more guests, and then you're probably going to charge quite a bit more. So suddenly your cash flow goes a lot higher. Then here's your down payment. So again, it's based on a standard 20%, but you could adjust it. If you're doing an investment loan, maybe that's 15%. If you're doing a second home loan, maybe that's 10%. But standards, 20, 25%. If you're doing a DSCR or something like that. Furniture renovations, probably going to be a little bit more than this. Probably going to be $30 to $35 a square foot, depending on what you're trying to do. And then your closing costs. Closing costs might be, depending on what you negotiate with the seller, credit, 20, 25, 30,000 or more. So as you adjust all these, they adjust your numbers. So as we can see here, if you add multiple more doors, you're obviously going to profit quite a bit more. But let's just say we stick to 2 bed, 2 bath at 8 guests, or actually, let's say call it 6 guests. And we're going to probably end up doing it a little bit nicer than those places with more amenities. So 450, and let's just say 65% occupancy, because we're going to cater to the skiers in the winter, the mountain bikers in the summer, and the people wanting to go to the lake in the summer. So our profit cash flow will be $37,820. Again, this is a rough estimate, but that gives you a really good baseline of where to start. Thanks for watching this video. We will leave a link in the description below to this deal analysis so you can check this out for yourself. Also, we have a partnership with BNBCalc, so if you're looking to sign up, we have a special deal for you where you get a discount and it helps support this channel and our growth.